Welcome back. Chapter 7, Psychology. Probably something we don't discuss enough as traders. I think it's extremely important, probably one of the most important things. For you to be a long-term profitable trader, you have to have your psychology down. I would have an interesting background for this video, but instead I've just got a chart because I couldn't pick anything to show you. So this one's pretty much going to be me talking, and the chart just in the background for something to look at, really. Psychology is a tricky one. Initially, there are a lot of psychological hurdles to overcome when it comes to trading. I've traded for nearly 6 years now. I've probably seen and done everything that you've experienced or will experience, made the same mistakes several times over in some instances. But the big takeaway for me is psychology, and that is you cannot become emotional. You have to become emotionless when you are trading. Whether or not you win or you lose, you cannot let emotions come into your thought process. Our trading strategies are very mechanical. They have set rules. So the inverse fair value gap strategy, we need a sweep of liquidity. Do we have it? Yes or no? We need ideally a single fair value gap. Do we have it? Yes or no? Do we have a minimum of a 1-to-1 R for the trade? Yes, we do, or no, we don't. So it's very mechanical. However, if you start to let your subconscious creep in and your thoughts creep into your trading, you will potentially encounter issues. Something you also need to be very prepared for is you are going to experience losses. That's a fact. As sure as death and taxes, you're going to have a loss. So that's something you need to come to terms with. Think of it as a learning experience. Think of it as anything other than a loss. Technically, obviously, it's a loss. But however you need to deal with it and rephrase it in your mind, do it. Because if you start to take them personally, you'll then start to revenge trade, and you'll be FOMOing into trades. And before you know it, that account will be blown. The two things that will kill an account quicker than most, I think, is greed and patience. If you get too greedy in the market, you'll probably fail. If you lose patience, you will fail. So if a setup hasn't turned up that's met your rules, you become impatient and then you force a trade. You take a trade that you know you shouldn't, and then it loses. And because you know you shouldn't have taken it, it's not a valid loss anymore. So you start to beat yourself up about it. When you start to do that, you start to get angry. When you start to get angry, you start to make irrational decisions. And talking about that, never sit down at your monitor to trade. If you've had a bad day, you've had an argument with someone, you're not feeling well, you've got a hangover, you've got children running around, you've got things to do and you're trying to get a trade in before you go to an appointment, all of those things will negatively impact your thought process. Try to keep your trading as mechanical as possible. It's yes or no, black or white, 1 or 0. The moment you start to put feelings and emotion into trading is probably when it will start to become very, very difficult. The Discord group that we run, we touch on psychology quite a lot because it is, in my opinion, one of the cornerstones. Liquidity being the cornerstone of the actual market and psychology being the cornerstone for you as the trader. So my tips to newer traders would be, don't over risk. If you've entered a trade here, let's say for argument's sake, you've entered a trade and you think it's going to go down, you've entered a sell. You shouldn't care whether or not this wins or loses. The only time people start to care about a loss initially is if they've over leveraged. If I've leveraged $1,000 here and I should have been really leveraging $100, I really need this to win. I need it to win. I need it to win. If it then doesn't, I've over leveraged. I'm angry, which is exactly the place where you don't need to be. Emotions have come into the trade again. If you've risked $50 on this trade, you're not going to be that angry. Hopefully, not angry at all. If you've over leveraged and you've risked $1,000, you are going to get angry. So make sure you manage your risk. If you've managed your risk correctly, you shouldn't care whether or not the trade wins or lose. The emotion when you win is a slightly different thing. When we win, our brain produces chemicals, probably serotonin. That gives you a slight buzz. And the issue with that, if it's not kept in check, is that's the same buzz that gamblers get. And that's why people become gambling addicts. So you need to keep that in check as well. Yes, of course, you can enjoy a win. What you don't need to be doing is getting excited about it and bouncing off the walls, because that will just teach your brain that there's this extreme joy associated with winning a trade. And by default, when you tell your brain that, the other side of that coin is extreme sorrow when you lose. Now, you need to be slap bang in the middle. You can't be emotional for either. If this trade wins, it wins. I've met my trading. It met my trading rules. I've followed my risk strategy, my trading plan. Okay, the outcome from A to B equaled C. If I lose, did it meet all of my trading rules? Well, yes, it should have, because otherwise I shouldn't have entered the trade. Okay, it's a valid loss. I know that I'm gonna encounter losses. So come to terms with that fact that you are gonna have losses. But the big takeaway is try to take the emotion out of it. Our trading strategies are very mechanical for a reason, and that's so that they're easy to follow, but they take out a lot of the psychology and a lot of the emotion. Not all, but most. It's your job for that final little part to make sure that the tiny little room that we've left in our trading strategies for human interpretation, you don't let your brain run away with you. So make sure you're managing your risk. Make sure you're in a good state of mind. Don't be sat at the charts if you're angry, or you've been arguing, or you've just stubbed your toe, the children are screaming, you've got an appointment in 10 minutes. All of those things are going to really negatively impact your trading. Make sure you've got a clear mind. So exercise, go for a walk, meditate, eat relatively well. Don't just sit down after 3 pints of lager and a pie and start trading. It's not going to end well. So make sure you've got a fresh, clean mind. Make sure you're well rested. Try to keep your emotions in check. But the biggest thing is follow your trade plan. Follow a trade plan, follow your risk strategy, and then you shouldn't be getting emotional. Hopefully that's given you a slight insight into how I trade and how I've developed over the years. It's something that we do touch on a lot in the Discord group, because I think it's really important, and all too often is overlooked. So that was this chapter, psychology. We've got one more chapter, which will be the Discord, and I look forward to seeing you soon. Take care.